The CRA sent a letter. Not a refund notice, not a confirmation, a penalty. For using a TFSA wrong. Not for fraud, not for anything intentional. For a mistake that thousands of Canadians make every single year, usually without realizing they made it until the letter arrives. And the worst part? I did not know is not a defense the CRA accepts. Let me tell you about Nina. Nina is 27. She opened her TFSA 2 years ago. She has been contributing regularly. She felt on top of things. Last spring, she needed some cash for an emergency. She withdrew $4,000 from her TFSA in March, handled the situation, felt relieved that the flexibility was there. 2 months later, May, she got a bonus at work, $4,000. She put it straight back into the TFSA. She thought she was being responsible. She withdrew and recontributed the same amount, back to where she started. No harm done. 8 months later, she received a notice from the CRA. She had overcontributed to her TFSA. The penalty, 1% per month on the excess amount, charged for every month the overcontribution existed. She owed the CRA money. For doing something that felt completely logical, Nina made the single most common TFSA mistake in Canada, and she is not alone. The CRA processes thousands of overcontribution notices every year, most of them for exactly this reason. Let me explain how TFSA contribution room actually works. Because the rule that caught Nina is not obvious, and almost nobody explains it clearly up front. The most important TFSA rule most people misunderstand. When you withdraw money from your TFSA, that withdrawal amount does not restore your contribution room immediately. It restores on January 1st of the following calendar year. Read that again. January 1st of the following year. Not the next day, not the next week, not the next month. January 1st. Nina withdrew $4,000 in March. Her room did not return in May when she recontributed. It would have returned January 1st of the following year. By recontributing in May, she used contribution room that did not yet exist. She overcontributed by $4,000 for 8 months. The CRA penalty, 1% per month on the overcontribution. 8 months at 1% of $4,000 equals $320. Not catastrophic, but completely avoidable if she had understood the rule. And for people who make this mistake with larger amounts, or who let it run uncorrected for longer, the penalties compound significantly. The 4 TFSA mistakes that trigger CRA penalties. Mistake 1, the same year withdrawal and recontribution trap. Nina's mistake. Withdraw in any month January through December. Recontribute before January 1st. Overcontribution. 1% per month penalty on the excess. The fix. If you withdraw from your TFSA mid-year and want to recontribute, wait until January 1st of the following year when the room restores. Mistake 2. Contributing without knowing your actual room. Many Canadians contribute to their TFSA without checking their exact available room in CRA My Account first. This matters because your contribution room is calculated based on your age, the years you were a Canadian resident, and any previous contributions and withdrawals across all your TFSA accounts, including ones you may have forgotten about or closed. If you opened a TFSA at one bank, contributed the maximum, then opened another TFSA at a different platform, and contributed again without accounting for the first, you have overcontributed. The CRA tracks your total contributions across all institutions. You are responsible for tracking your own room. Mistake 3. Contributing as a non-resident. Your TFSA is a Canadian resident benefit. If you leave Canada, move abroad for work, relocate for a relationship, emigrate, and you continue contributing to your TFSA while a non-resident, the CRA charges a penalty of 1% per month on every contribution made while non-resident. The TFSA does not close when you leave Canada. The money inside it remains sheltered. but you cannot contribute new money while you are not a Canadian resident without penalty. If you are planning to leave Canada, stop TFSA contributions on the date you establish non-residency. Do not contribute again until you return and re-establish Canadian residency. Mistake 4. Spouse or partner contributions made incorrectly. You cannot contribute to your spouse's TFSA directly. A TFSA is individual. Each person has their own room, their own account, their own contribution limit. You can give your spouse money, and they can contribute to their own TFSA, but you cannot contribute to their account as if it were your own. Each person must manage their own contribution room independently. This is a less common mistake, but it causes confusion for couples who are used to spousal RRSP contributions, which do work differently. Let me show you what these mistakes cost at different scales. The same year re-contribution mistake. Small scale. $4,000 over contribution for 8 months. Penalty. $320. Annoying, but manageable. The same year re-contribution mistake. Larger scale. Someone withdraws $15,000 from their TFSA in June to cover a house purchase closing cost. They receive gift money in August and recontribute $15,000, thinking they are making good use of their account. Over contribution, $15,000 from August through December, 5 months. Penalty, 1% per month on $15,000 for 5 months, $750. Still not devastating, but a completely unnecessary cost. The forgotten account mistake, compounding over time. Someone has a TFSA at their bank, contributed $7,000 this year. They also open a wealthsimple TFSA and contribute another $7,000, thinking they have separate room for each account. They do not. TFSA room is shared across all accounts, regardless of institution. Over contribution, $7,000. If this runs uncorrected for 12 months, $840 in penalties. The non-resident mistake, the most expensive scenario. A Canadian moves abroad in March for a 2-year work contract. They continue contributing $7,000 annually to their TFSA because they did not know the rule. Year 1, 9 months as non-resident, contributing $7,000. Penalty, 1% per month on $7,000 for 9 months, $630. Plus the annual penalty continues on the outstanding amount. Year 2. Full year contributing another $7,000. 1% per month on $14,000 for 12 months. $1,680. 2 years of not knowing the non-resident rule. Approximately $2,310 in penalties. Plus the original contributions must be removed to stop the penalty clock. Here is exactly how to protect yourself from every one of these mistakes. Step 1. Check your exact contribution room right now. Log in to CRA My Account at canada.ca. Your TFSA contribution room is listed directly. This is the only number that matters. Not what you think it is. Not what a bank told you. The CRA number. Do this before making any TFSA contribution. If you do not have a CRA My Account, set one up. It takes 15 minutes and it is the single most useful financial tool available to Canadian taxpayers. It shows your TFSA room, your RRSP deduction limit, your tax assessment history, and your benefit payment schedule. Step 2. Track your own contributions through the year. The CRA updates your TFSA contribution information with a delay. The room shown in CRA. My Account reflects your contribution history up to a recent date, but may not include contributions made in the last few months. Keep your own running record, a note on your phone, a simple spreadsheet, whatever works. When you contribute, note the date and amount. When you withdraw, note the date and amount and the January 1st restoration date. You are your own TFSA compliance system. Step 3. Never recontribute a withdrawal in the same calendar year unless you have confirmed available room. This is the rule that catches the most people. Before recontributing any amount to your TFSA after a withdrawal, check your CRA My Account room first. If the withdrawal you are trying to recontribute happened in the current calendar year, assume the room has not restored. Wait until January 1st. The one exception: if you have unused contribution room from previous years that has never been used, you may have room available that is unrelated to the current year withdrawal, but confirm the number in CRA My Account before contributing. Step 4. If you are leaving Canada, stop TFSA contributions on your departure date. Establish clearly in your own records the date you became a non-resident. This is typically the date you leave Canada to live abroad, though the exact determination of residency has nuances that a tax professional can clarify for your specific situation. From that date, make no new TFSA contributions until you return to Canadian residency. Your existing TFSA balance continues to grow tax-free while you are abroad. Just no new money in. Step 5. If you discover you have overcontributed, act immediately. Do not wait. The penalty is 1% per month on the overcontribution amount. Every month it sits uncorrected, the penalty grows. Log into CRA My Account. Review your TFSA room assessment. If you have overcontributed, withdraw the excess amount from your TFSA immediately to stop the penalty clock. You will still owe the penalty for the months the overcontribution existed, but withdrawing the excess stops further accumulation. You may need to file a TFSA return, the T1028 or RC243 form depending on your situation, to report and resolve the overcontribution. A tax professional can assist with this if the situation is complex. Step 6. If you received a CRA TFSA notice, do not ignore it. CRA notices related to TFSA overcontributions are common and resolvable. Ignoring them is not a strategy. It allows the penalty to continue growing and may result in additional administrative complications. Read the notice? Understand what the CRA is assessing. Contact the CRA or a tax professional to resolve it promptly. Here is the reframe. The TFSA is one of the most powerful wealth-building tools available to Canadians. Tax-free growth, tax-free withdrawals, flexible access, no impact on government benefits, but it comes with rules. And unlike some government programs where mistakes generate gentle reminders, the CRA's TFSA overcontribution penalty is automatic, specific, and unapologetic about the reason. The rules are not complicated once you know them. Withdrawals restored January 1st, not immediately. Your room is shared across all institutions. Non-residents cannot contribute. Check CRA My Account before contributing. 4 rules. Known in advance. 0 penalties. Nina's $320 penalty was not the result of complex tax planning gone wrong. It was the result of not knowing one sentence. Withdrawals restored January 1st. You now know that sentence. The TFSA is a gift. The Canadian government created an account where your investments grow completely tax-free, and every dollar you take out is yours, fully, forever. No tax, no penalty, no forms, but only if you use it within the rules. The rules are simple. The cost of not knowing them is real. Check your room at CRA My Account before every contribution. Track your own withdrawals and their January 1st restoration dates. Never recontribute in the same year without confirming available room. Stop contributing the day you leave Canada as a non-resident. Act immediately if you receive a CRA TFSA notice. Nina paid $320 to learn one rule. You just learned it for free. Use the account. Use it fully. Use it correctly. Because the only thing worse than not having a TFSA is having one and getting fined for using it wrong. Drop a comment and tell me, have you ever received a CRA notice about your TFSA? Or are you realizing right now that you might have made one of these mistakes without knowing it? Tell me your situation. No judgment. I read every comment, and if you describe what happened, I will tell you what I would do first. If you know a Canadian who has been contributing to their TFSA without ever checking their room in CRA My Account, share this video now, before January, before the next contribution, before the letter arrives. Subscribe to Nuella Invests. Every week, we cover the Canadian financial rules that matter before they cost you. See you in the next one.